Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I'm Joe Nikruto, as always, here with
Dan Hussey.
Dan Hussey. How you doing?
Good, Joe. How you doing this week?
Great. What kind of weather we got for the trick or treating tonight over there in your neck of the woods?
I feel like we had it a little tougher when we were kids. There was always a chance of a snap of snow or something. It actually looks pretty good. It looks overcast, right? But I think it's just a light jacket weather. We're going to be going out pretty early at 4. Our town does it early. There's young kids and stuff. So get it done quick and be home by bedtime.
I got some great nephews that I have to chaperone out through the neighborhood. They love the Halloween. They love everything spooky.
I'm sure you have all the good houses mapped out by now, the king size.
We do want to know.
Places to
There are certain things that make some houses better than the others. Full-size candy bars, folks that may have some adult beverages on offer.
Isn't that the new thing, right? The bar checks that you can go through.
We'll see what we can do. Maybe some neighbors, maybe some lady neighbors that we hadn't met yet before. Who knows? Who knows what the night holds on Halloween, Dan?
You've got some plans there, sir.
I got plans, man. But the kids love it, and so we get out there and they just have the time of their lives. And I like to let them run around for as long as they can take it. And like you said, in some years it's cold and snowy, and I just think this is so much fun. Let's see how long these kids can endure. But it's really nice here. We had clear skies all day, sunshine.
Yeah,
it's going to be about 50, huh?
Yeah, it's 50s.
That's almost like cheating, isn't it?
Right. Like I said, we used to, when I was younger, you'd have to wear your jacket and be over your costume. So you're just going as a big fluffy down jacket. So
kids these days, I swear.
Got it easy, Joe.
As always, we got a lot of stuff to cover today. Grain and livestock markets. We'll talk market movement, shed some light maybe on what it all means and what Zaner Ag Hedge thinks about what is happening. As always, keep in mind with everything we talk about today, futures trading does involve risk of loss. Let's make sure that this market activity fits with your personal risk profile. And if you have any questions about how to figure that out, just give us a shout. Dan and I, the entire Zaner Ag Hedge team, always happy to discuss with folks if this type of hedging and speculative activity is right for you or your operation, and what kind of strategies we can employ to help you manage the risk involved in your operation. Dan, I would guess that it doesn't make any sense to avoid the big episode this week, this U.S.-Chinese trade deal, does it?
The big headline that's driving, I think, most our price action. Certainly, I think it's the most palpable in soybeans, right? But no, it looks good, right? I think we've got a market that is whether or not we agree with the amount that China's buying or whatnot, or that they need to do more, or that we're going to be able to ship it. All the questions you have around there surrounding the skepticism around it. You have a market that is clearly pricing in that new type of optimism. So you've got a technical, I think, breakout here higher for soybeans that's being fueled by some really good positive news. China to buy those 12 million metric tons of soybeans this season. Bassett said that I think it's 25 million total agricultural products potentially annually. So it's good to see, or maybe even 25 million per year. It's kind of funny because it's China committing to do business that we otherwise always thought they're going to do, or are on the books anyway for doing. Obviously, this year we haven't had those sales, but okay, here's China throwing up the numbers of what we were otherwise going to anticipate them doing. And then, of course, giving themselves some outs here and there to these types of things with inclusion of market-like language. But that's okay, right? Soybeans are obviously optimistic on that. We'll talk about that price action here in a second.
Internally, we see some suspicion as the sharp pencils that Ag Hedge parts through the numbers, not only what they have done historically, but what they've done here in recently with business that they have done with Brazil, business that they've done with Argentina, and maybe what they actually do need versus the idea that they're going to take 12 between now, let's just call it November, December, through to the end of January. So 3 months, and whether or not that's possible or what the time frame on that could be. And so it's safe to say that there may be some suspicion here about whether or not they can meet that. I can't remember what the number was, but there's a certain weekly number that is pretty stout that they'll have to meet if they're going to move. And certainly if anybody can move big numbers of beans or corn or wheat, it's the Chinese, right?
Sure. Right. Where there's a will, there's a way here. But yeah, mathematically, right, it's all going to math out over that time frame and see if it can get done. And assuming it can, that also means how high can beans go. And if it can't, how much of whatever business does get done will drive bean price action higher for the near term, because that was a pretty strong weekly close.
And so to that end, we opened the week 1052.5 in November beans. The high was 1101. I think we made that here. Might have made that here this afternoon, huh? Low 1052.
Yeah, pretty much right into the close. We were making the highs for the week there for the bean contracts.
Last trade was 1099 and 3/4, Dan. That's up 58 on the week.
That's a remarkable week, folks. Look at that gap up and go. Wow.
Funds. There was some debate about this today too, about where these commodity trading funds may be positioned. Adam had commodity trading funds long about 75,000 beans coming into the day. With no CFTC data, those numbers will not be confirmed until we get a reopened government and data from the CFTC. We don't know how long that will be. But back to the technical action here, Dan, per your statement earlier, that is an outbreak of great news that has resulted in a breakout on the technical chart. 1099, that clears all the hurdles, does it not?
Yeah, that puts you through a lot of that upside resistance, right? And now up into really testing up into these old ranges. Like, can we get up above 1120 now and get up into this old range, which, okay, could be capped by $11.80, $12, right? There's been a lot of talk on social media, and you'll continue to hear this, that beans don't like $11. And that's true. They usually either whip through it back up to 12 or fall apart back down into the old range, which, hey, with this open gap below, we've got to have some skepticism on this breakout altogether. But in the near term, we did have a market that moved a few days higher. We had a nice whipsaw pullback to test that old gap out higher, and really old trendline resistance now is support, and the market's now treading higher. So it's still a breakout until it's not. The weekly close was strong. You can't really say anything negative about the way this chart looks other than, oh boy, it's overbought. Boy, a pullback would be nice. But we got that price action this week, right? If you look at that intraday chart for the week, we had a big dip here in tests of old resistance levels as support, right? And the market came back. You can see it maybe a little more clearly here on the Jan chart as well, and stayed above those key technical levels. So really strong close for soybeans. Let's see how this next week plays out.
Let me amend my earlier weekly comment here. For those who are following along at home, I quoted November, which is not prompt. January, now the front month where all the volume and open interest is. We opened the week at 1073 3/4, high 1115 3/4, low.
Yeah, amazing.
Quarter, right. Close 1115 1/4, right on the highs, up 55 on the week. That was a pretty stout move. November.
Yeah, and there's that trend line there too, right? Broke out of that clear. Wow.
So bean oil kind of eroding here. The thought is that the market is beginning to recognize that we're going to have difficulty finding a home for bean oil as we continue to lack clarity or continue to lack focus.
It's always focus, right? I mean, it must be said here when we look at that December meal chart, like, okay, there's the reason, right? We've got a big move in beans. Beans and meal are falling together. So if we're crushing soybeans for the meal and we don't have a home for the oil, well, oil is going to be selling off and finding that, hunting out that low.
Opened at 50.62. The high was 50.94, 48.56 low, closed at 48.68. That's down 159 on the week. As you mentioned, December meal, tale of two cities there. Looks like somebody's caught, right? We've had some discussion about this earlier. Let me get these numbers out of the way. We can guess. Opened at 297.20. High was 323.30. Low was 294.80. Closed 321.60, up 27.50 on the week in meal.
That's amazing.
Somebody's stuck, wouldn't you say?
Yeah, I mean, we ran up through all of these technical levels. We gapped up higher, up blew through the 200-day. Anyone that is still short this market is definitely getting squeezed and stuck in that short now. I don't think there's much hope for a pullback. Eventually it's going to, but the market's going to stay overbought and continue higher longer than shorts can stay liquid for sure.
What would we, I can't really get my mind around why.
Well, okay, here I've got a theory here too, is right. If all of a sudden we're going to have a bunch of feeder cattle entering this country from the south, there's all of a sudden meal demand.
Well, they're not as of yet this week. Another
I think
big story here.
I think the
Spoiler alert.
anticipation though of demand, right, is
Okay.
starting to sell that off. Plus,
Okay.
there's probably export demand here too. I think below $3 here for soy meal was probably cheap on the international market as well.
I get you. I get you. Looks to me like somebody's caught. There's
Yeah, for
absolutely
sure.
I don't know. It's difficult to speculate, right? We don't know.
But what we do know is we always talk about that soybean type move when it's real, when the meal moves, right? So
Good point.
We tend to believe it a little bit more when the meal finally goes as well. So it's just a good confirmation, I think. There, man, if bean oil could stabilize as well, you got a lot of strength in the bean complex.
I don't see. I'm looking back pretty far, all the way back into 23, and there really isn't any kind of rally like this on this chart. Close, maybe back in September of 2023.
Yeah, sure.
But
those are times of the year where you get weather markets and stuff. This is I guess October 2021, right? You had a massive move, and maybe like these bigger moves happen from these areas where you're just so cheap down in the low threes. We got down to 260 there, right? So I think the meal chart, like you said, just got too cheap. Somebody got caught short, and the squeeze is on.
Sure is interesting.
Yeah.
Let's jump to corn. D's corn, we opened the week at. That is a rather productive looking chart, isn't it? Opened the week at 427 and December corn. High was 437. Low was
426.
Yep, 426. We closed back up toward the top of the range, 431 and a half, middle of the range maybe, 431 and a half, up 8.25 on the week. Funds, here another debate. Funds came into the day short maybe 74,000 corn. And so corn not quite the runaway train that beans and meal are. Right?
No, but I think it was a technical win for the bulls, like closing the week here above that head and shoulders pattern or above that neckline on the head and shoulders pattern. That's what I think this week's close was all about here. You can see on that weekly chart and that neckline right around here around that 430 area.
That is a very
left
good
shoulder,
point.
Right shoulder, head. We're closing above it. We didn't break out of the 55-week moving average. Let's move down to the daily chart and see.
200 bars.
200-day, right?
Yeah.
200-day moving average. So that gives us like reason to think, okay, if support can hold here, particularly above this trend line resistance, above the 18-day, above these highs really around 430, you take out that 200-day. Now the squeeze is back on up towards this larger downward sloping trend line up towards these old range highs for December. And by the way, you're breaking back into this old range that we were below and broke below here in July. So it's like this reversal and inversion on the chart back above the 200-day. Looks good for 30 cents higher if this can get going.
I'll tell you, closing over that 436, let's just call that 437, that would go a long way toward.
Yeah, it would go a long way. Agreed. And it's only 5 cents away, right?
Yeah, these markets these market forces, market participants have been, all you got to do is look at this chart.
Yeah.
They come into these technical levels and all of a sudden stomp on this rally, and 8 days later, you're 60 cents lower. So this 437, 436 and 3/4 really represents what I think is the last technical stand for whatever force that stands against
that's
corn
holding
rally.
This down. Sure.
I know I sound like a crazy person, but we've seen this before where we get into a technical level, you've got all the fundamental strength, you've got news headlines, and then all of a sudden something pops and bam, down we go. So it would be really, really, from a psychological level, I think this corn market would be, so okay, you close over that 437 and then you want to retrace and find a 10 or 18-day moving average, no big deal, right? That's fine. But get us a couple closes over that 437.
Agreed.
I think we're going to be off to the races.
Agreed. So this week obviously was a technical win for the bulls, but they got to hang on to it next week. Like Joe said, you got to put it out and over some certain levels there to, I think, really score the point.
Nice to see that head and shoulders continue to follow through in the direction.
But you also have levels now to the downside, right? If you break below that 18-day, the 410, right? There's technical levels to the downside that, now become targets if we roll
that
over.
That should hold, right? If this is going to be an uptrend, we're going to hold the 18-day.
True.
Yeah.
Right.
Yep, for sure.
If it even comes to that.
And the beginning of kind of a flagging type consolidation here, which is, what does this chart tell us? The chart says we sure would like to know more about yield. We sure would like to know if maybe the Chinese are not. They talked about milo. There's some talk about sorghum. Maybe they'd like to have some corn too. This corn market's going to take a breather here, try to gather more information, more technical impetus to get us out over 437 and 440. Right?
Mm-hmm. Yeah, it's going to take more than what we've seen. Maybe if beans and wheat really roar, like corn's going to have to follow too, but we'll see. Which, hey, I'm not saying they're not. We've had good closes on the week, and clearly I think since August, the early move was in corn, but now you're starting to see the follow through of beans and wheat really, I think, start to pull.
And it's funny because corn gets a spot in the back seat, even though the real demand story here has kind of been with corn the whole way, right?
Yeah. And it's almost like the least impressive demand we've ever seen.
Off the charts. How about, I'll tell you, another really freaky thing here is wheat. December Chicago wheat opened at 517. The high was 535 and a half. The low 516 and 3/4.
Yeah,
closed at the highs 534, right near the highs. Dan, that's up 21 and a half. I had to double check this market to make sure that I was clicking on the right chart. That is a rather serious weekly move for wheat.
Beautiful move here, right? Out over this downward sloping trend line. You slipped on the 18-day. We never really looked back. We gapped up over that 55-day, ran into the 100-day, held the 55-day as support. We're back up testing the 100-day. We break out here at 200-day, the elusive 200-day moving average up there around 567.
Right.
It loves to get up there and test every quarter. It's just screaming to me that it wants to get up there. We're leaving this gap open, so it leaves me a little conscious to the downside. It's crazy. If you go back here to this KC wheat, you had this key reversal on Kansas City wheat that really started the whole wheat rally way back in October, and it's been forecasting ever since that it wants to go higher.
Chicago's coming along for the ride.
Yeah, and right, and Chicago's along for the ride. And I say that too because when we take a look at that KC Chicago corn or wheat spread, it's incredible to see that Chicago's actually at a premium here to the KC wheat, which normally lives somewhere up in that 10 to 20 cent area or over. So we're starting to maybe peel off on this spread, come a little higher. When you see a bull trend in the wheat market, usually you see that KC wheat try to get that premium back. So I'm watching this as like kind of a positive correlation. And it's good to see it starting to try to do that. And it'll probably be something that occurs into next year as well. But nevertheless, Chicago wheat up 9 3/4 cents on the day, almost an outside, tried to do that outside day higher.
Real close, right? Real close.
But hey.
On good volume. The last 5 days, really good volume on this.
Solid volume.
That gap.
Huge weekly volume. If you tally up this week, when we go back and look at that weekly chart again, and look at that spike in the weekly volume. Holy cow.
And that kind of volume change in the direction of price speaks to confirmation. Right. You have a sea change underway here.
And it's right. This was price discovery. We got above technicals. We've held them as support, right? Like the market is discovering where it wants to be. And clearly it's above 520 area here for now. Resistance has been at 540, but I think it's going to get out over it. I think we're heading to that 200-day moving average.
Interesting that these grain markets should be finding technical footing while the government is shut down.
Crazy, right? It's almost like the market enjoys hiding in the dark spots where we can't see it.
That is very funny. Do I have any foil on in this hat? Maybe I do. Anyway, so we got to talk about meats, right? This is the big deal, I think. Feeder cattle here this week tried to find some footing. That is a crazy looking
weekly charts look crazy. Look at that.
Yeah. January feeder cattle, which is where it's at now. Prompt month open 330
lower on the week.
Oh yeah. High 340.50, low 320.67 and a half. Last trade 331.90. That's down a whopping 16.27 and could have been way, way worse. That low was 320.67. We bounced rather aggressively off of that 320 level, but still, I would say maybe there's a moral victory in here that we closed in the top half of the range.
Yeah.
Still being
but otherwise, it just looks like a bear flag to me. You're still below those gap levels. At some point, you want to say it's going to rally here. That's the 100-day moving average we're basically closing on top of. So let's just call it what it is, that 100-day. But you're below these supportive areas that we held back in August and September. So there's not much like grace that you can give that kind of chart. Like you said, maybe just a moral victory that we didn't continue lower for the week. We just opened lower and stayed there.
Interesting thing about feeder cattle, in my opinion, is that not much has actually changed yet, right? A lot of jawboning,
Right.
a lot of possibility, but there certainly aren't more animals available today. But right,
No,
I'm
but
sure-
for the Packers, you're right. This 330 Jan feeder looks a lot more attractive than the 380 does, no matter what
Coincidence.
happens.
yeah, what a coincidence.
Just saying. Take okay, tinfoil hat off now.
Yeah, how many Packers does it take to really run an entire global meat industry? Turns out about 4 large ones.
4, right? Yeah,
right.
Just a couple.
So when you look at this chart, you think, okay, well, there must be some sort of, from where we were at 380, where we were firmly convinced that there weren't enough animals, to all the way down here at 320, and nothing has actually changed yet. Only perceptions. Maybe we're going to jab these cattle.
I mean, let's not forget though. Like, let's forget how far we've come. Right? Like, does 280 to 300 really change in this environment from where we are? Just because like that shortage of cattle hasn't changed. Well, when we were back at 280 back in June of this year, we were just as short on the cattle herd as we are today. So I don't know what was that last $80 run up, right? Other than a runaway bull market, right?
Yeah, more of there being less animals, I think is what it is.
Exactly.
And every
right.
cattle on feed report came out and said, now you're 9% light, now you're 60%.
And so look at our pullback here from 257 to 210 back in August of 2023. It's not so different as to the extremity of the pullback we had today or have right now. So I'm just pointing out that like we could continue to fall all the way back to 300, and what's the damage you've done on this chart when we began this rally from 120?
Well,
right.
And that's my point exactly.
Wow.
You almost hate to say this. I almost hate to say this, but this is what you and I had been talking about all the way up, right?
Yeah.
Is that, hey, listen, when they turn this thing, it's really going to turn, and there isn't going to be a very satisfying explanation, or maybe there will be. Maybe theoretically you can vaccinate every animal and put eyeballs on it.
Maybe rainbows, butterflies, and
exactly. And maybe the government intervention in the meat market is going to
be fair, maybe 380 feeders was a little high, justifiably so.
And that's my point too, is I think now we're going to litigate that. We're going to find out with price discovery. And I didn't yet see any cash cattle trade here today. We were lower on the day, led me to believe that maybe it was shaping up a little bit lower. Boxes were lower yesterday. So you're really watching product here. You're really watching cash cattle trade. But what has happened is that they have changed the perception about maybe we're going to get more meat into this country. Maybe we're going to find a way to get these animals. The president from Mexico did come all the way to Washington and left without any type of agreement, at least as far as we know. But maybe we're headed that way. I don't know. It's very difficult for me to see how this market does not snap back up to the 358 level.
Well, it's got to fill these gaps, right? To some level, I agree. You want to touch back to the 50 and the 100-day, 18 and 55-day moving averages, I think, has resistance here. I think those are big levels you want to get back to. If you head above 340, I think without a doubt, right, you break this range higher. You've got that short squeeze back up into those technical areas that even if you think this market's going lower, should probably show some price discovery back up higher into.
That's what I thought too. Some respect for the price discovery process, which to me takes it back up to 358. I tend to think that the potential for new highs is still there because I don't really believe that the government can or should. Maybe there's a way to get this Mexican border open without risking infecting the entire southern part of this country with New World screwworm. Maybe there is, and maybe there's a vaccine. Certainly that would be terrific for the market if we could find a way to do that. I'm nervous about what that does to cattle producers who have paid big bucks for some of these feeders. We've got a wise participant in our group, and he says they want to take that $1,000 from the producer and they want to take it right away. They all sort of feel like that's coming, and that's the way that this works. But my hope is that maybe we find a higher price here where everybody can make their way through this as we adjust to whatever the supply is going to be, whether it's going to be more or less.
Yeah. And unfortunately, right, I think we can both agree that we'd love to see more hands off from the government and let the free market figure these things out, right? And I don't disagree. And that's the point, right, is this big drop. It's all, I don't want to say it's fugazi, but it's all right. The futures, it's in the paper. If we don't see the cash follow through lower, you're going to see them stabilize and come back up to meet it, et cetera, right? So you're going to see that board price, I think, really adjust ahead of headlines and start to show it to its hand. But sometimes we go too far too fast. And if there is no reason for that border to get reopened and we have the same problem we had yesterday, yeah, we probably shaved it off and feeders will get bought back up here in a hurry and watch for that turn. Because if it happens, the December live cattle will show signs of bottoming as well. And you're seeing pretty much the same thing against the 100-day moving average there in those December live cattle.
How about those D-Strats? Opened the week at 233.52.5. The high was 234.07.5. Low 223.17.5. Closed at 229.67.5. That's down 425. Fats not necessarily going along for the ride that the feeders are on. And granted,
still falling, but yeah, agreed.
But you closed here at the fats as well
down,
in the top half
down.
of the range, right?
Yeah.
Top half of the range and feeders down 425 on the week, where last week you were down 790, and then closed back in the top half of the range, which you and I would consider technically a moral victory, I guess. And it's just hard to divine on that weekly chart. What do you see on the daily chart?
Yeah, but back above that 100-day moving average was a good close. I think, like you said, we need to see some price discovery back to that 55 and 18-day, around to 237 and 238. I mean, below 225, the 200 days down there around 214. Now you're getting back to levels from like last summer. So, yeah, I think we've seen support hold where it is on both the charts. We can make a good case for a little bit of price discovery higher. And of course, that doesn't take new highs out of the charts, because if nothing's changed, like Joe's reiterated, and I also agree with, if nothing changes, then why don't we go back there, right? There's just, these markets are starting to show signs that they're anticipating that change, and that's all we can really throw at them at this time.
So if we cover up the commodity tag and we don't know that this is December live cattle, you and I would look at that 18-day moving average at 238.80, or first the 10-day moving average, and say, okay, if we can comfortably close above these levels for multiple trading sessions.
Oh yeah, then you flip the script and you got a market now potentially trying to stabilize and build into longs. You'd think this market would then be trending higher.
Bear markets don't live above the 18-day moving average.
Right, exactly.
Yeah,
which we're below, but we'll see. Yeah,
right. It's just been such a violent, that feeder cattle move, and to a lesser extent, but still the same in December cattle. It's been so violent, and you think, okay, well, how should we protect, or how should we participate? And it has let me pause, but I think there's going to be time for action here shortly, don't you?
Yeah, no, I think there would. And if you're still thinking about wanting to get sold or do some protection here on the board, buying 320 puts and GN feeders isn't a bad idea. But I would also try to sell something lower than that, right, to try to bring in some premium. Because if we rally, right, you can use that rally to buy back that short put and then just leave your insurance put there, at play. And so talk about doing a put spread with the anticipation even of a rally, but maybe even thinking from a producer standpoint of what do you do if we're fearful that we're going to get one of those snapbacks, but we want to still get some protection on. That's how I would tackle that equation.
I gotcha, for sure. Dan, we should talk real quick about folks signing up for Karen's. We talked about China, and I saw something in my email today. If you're looking for another perspective on this U.S.-China trade deal, you can sign up for Karen Braun's Zaner newsletter. Even if you don't think you have, you've definitely seen one of Karen's charts online, and she's got about 86,000 followers on X. No exaggeration to say that people really care about her thoughts on the markets. You can get her in-depth but easy to understand analysis straight to your inbox. She's putting out great information all the time, sensible analysis around the news surrounding beans. You and I joke that we don't know what we think until we see what she says. We offer this to folks at no cost, no obligation. And so it's just the easiest thing, the most reasonable thing to do is to just click on that link below and get signed up.
Absolutely. Well, I think we've got a question of the week from Carter. Dual question of the week this week. Favorite horror film and favorite Halloween candy. Well, Halloween candy, that's just Reese's. That's not even... Of course, Reese's is the best Halloween candy. What do we? There is no question here on that. There's no question.
Dan, with my two kids and trick or treating, both with Max and Izzy, as safety is the primary concern for me with Halloween. I always wanted to make sure that we made sure that the Reese's were safe and that there wasn't some sort of evil plot to hurt children with Reese's. And so I would take it upon myself to just eat them all, just to be safe. And boy, they would get mad. I don't really know why they would be mad about my willingness
just looking out for your children's safety, Joe. I understand.
And it's any
a caring father, right?
Any father.
Agreed.
If I have to eat 30 of these Reese's cups in the next 48 hours, by gosh.
If you have to, right?
I will do it. Yeah. So that's an easy one. What's a second place Halloween candy that you might have to test to make sure it's okay?
I do like candy corns, but like that's the only like specific Halloween candy I can think of. I was trying to think of like a Halloween themed candy, but yeah,
it doesn't have to be Halloween. What's in that big bowl? It's the single serving. So let me ask you this. What's one that you would just rather the kids test to see if it's poisonous? Like you're not eating it ever.
They can keep the Whoppers.
Oh yeah.
The malted milk ball. No, ain't got time for that.
I'm down with that. Yep. I'm with you 100% on that one. So I think we agree on both sides of that question. How about, what was the other question? Favorite horror
film? I'm going with the classic Halloween. Let's go with Halloween 1, 2, or 3. You pick it.
Yeah.
I love it.
Which one of those movies is Michael Myers in?
Technically all 3 to some extent, but really the first 2.
Okay. So in Indiana, this is funny, but in Indiana, there is a Michael Myers of Fort Wayne.
Oh,
and so there's a dude in Fort Wayne who dresses up as Michael Myers and just wanders around the town.
Like on Halloween or just like throughout the year? Like this is just
I think it's throughout the year, but most specific, especially around during this season. And just goes to like regular places, goes to the grocery store, he's Michael Myers, goes to the gym, Michael Myers.
This dude is just nightmare fuel for an entire generation of Fort Myers children.
And I think he's not Fort Wayne. Let me phrase that. He's Michael Myers of Decatur.
Okay.
I think it's Decatur, Indiana. I think. But anyway, he's Michael Myers of in the northeastern part of Indiana. And it's just hilarious. He does such a great job. And he's famous.
Well, Michael folks, Myers. I definitely learned something today.
How about that, right?
Well, thank you for listening to the Zaner MarketCast. If you need more because you just can't get enough, you can follow us on Facebook, Twitter, and LinkedIn at Zaner Ag Hedge. Also, you can get daily market commentary by signing up for the Zaner Ag Hotline hosted by Ted Seifried. This free hotline gives you access to daily market commentary and gives you a chance to connect with us personally. Thank you again. Be sure to like, comment, and follow the podcast and not skip a beat. Happy Halloween, everybody, and we'll be back with you as price action develops.
Be safe. See you soon.